If you're in a group of people that thinks that the more money you make, the more you get taxed, you need to watch this video, because this world, I've always said it from day one when I started the channel, belongs and is dominated by the people who have access to the tools and the information that you need in order to become successful. And this thing of the tax brackets and all that is something that I've heard a ton of people talk about, and most people get this wrong. Taxes is one of the biggest expenses you're going to have. So make sure that you listen to this video, and then after here, you go and do your own research. I'm going to bring you numbers and prove to you how and why it's not true that the more money you make, the more money that you get taxed. And think about this for a second. The average person in the United States pays 30% to the government in the form of taxes. So yes, it's one of the biggest expenses that you will have. Therefore, it's one of the best pieces of information and the best topics that you can educate yourself on, just because the fact that you're paying the most money out of the money that you're making. Give me about 10 to 12 minutes and we're going to be talking about taxes. We're going to be talking about why you should aim to make more money, because it's not true that the more money you make, the more money that you get taxed. Stay with me for about 10 to 15 minutes and we'll uncover all the myths and all the different things that people have around taxes. My name is Andrew Pizzi. I'm an investor and entrepreneur out of Las Vegas, and I want to welcome you to the AP Show, where I'll be focusing on how to build a great life around health, wealth, love, and happiness, which I believe are all needed in your life for you to have a great life overall and not just in one specific area. Now, here's a deal with today's topic. We all know that whenever you make money, you are being taxed even before the money hits your bank account if you're a W-2 employee, and then you get paid taxes or pay taxes after if you're a 1099 independent contractor. Here's the deal with this. Let's say that you're getting paid $18 an hour. Most people don't realize that when they say $18 an hour, or when they say that they made $10,000 a month, or when they say whatever, when they're referring about the money that they make, they're forgetting the fact that they still need to count for the taxes that they haven't paid. So at the end of the day, we all need to understand the fact that whenever we talk about the money that we make, we need to consider the taxes that we haven't paid on that money, or the taxes that we paid on that money. Because if you make $18 an hour, that means that you're making about $36,000 a year, which is about $3,000 a month. But if you see your paycheck, it's more going to be like somewhere around $1,000 per paycheck if you get paid every 2 weeks, which means it's about $2,000 a month, not $3,000. And that's where the 30% that I was talking about comes into play. So everybody seems to understand that concept, but there's something deeper that many people have either heard or have come to me with the questions about taxes. Because many people that hear, for example, I live in Las Vegas, and many people that work in the casinos say this common mistake, which is, I don't want to work overtime. I don't want to do over 40 hours in a week because I'm going to get taxed more, and so I'm going to be left with less. And that is a lie. You never make less when you make more money. And the system, the tax system and the tax code is designed to tax you more, but we're going to go into that topic deeper because people just seem to not follow how it works. But at the end of the day, you need to take every advantage, and this is a short answer. We're going to go into a longer one. You need to take advantage of every time that you can do overtime, anytime that you can work more hours, and anytime that you can make more money, because it applies the same way if you're an independent contractor. Many people think that they can't make, or they don't want to make over $120,000 a year as an independent contractor because you're going to get taxed more. And even though that's partially true, it's not completely true, and it's definitely not as people describe it. Now, the first thing I'm going to give you is the tax brackets for 2024, and this is on the IRS website, so it's not just me talking, this is on the IRS website. If you make anywhere from $11,600 or less, you're going to be taxed 0%. $11,000 to $47,000, you're going to be taxed 12%. And this is if you are an independent single person. 12% if you're making $11,000 to $47,000, 22% if you're making $47,000 to $100,000, and 24% if you're making $100,000 to $191,000. And then that amount about doubles when you're married. So basically, if you're single, those are your amounts. And then if you're married, it's about double. It's not exactly double, but it's about double. Now, the math that I want to do with you here is, let's say that $18 an hour puts you right at 12%, right? Because you're going to be making about $36,000. So you're putting 12% into taxes. Here's the deal with people. They think that if they work overtime and they go over the $47,000 tax bracket, they're going to get taxed at 22% for the full amount. And that is not correct. You're only going to get taxed at 22% anything over 47,000, not from 0 to 47,000. Most people think that the whole 48,000 that they made now because they work an extra 20 hours a week or whatever is going to get fully taxed at 22%. And I'm going to do some math here with you, but I wanted to give you the tax bracket from the IRS website so that when I do the math, it makes sense for you, because I just want to make sure that we have everything clear here, because it always makes sense for you to go and make more money. On the other hand, if you're an independent contractor and you have a business, it never makes sense not to make more than $191,000, just because that's when you start getting taxed more. Here's the deal. If you're making $100,000, you're getting taxed at 22%. If you're making $191,000, you're getting taxed at 24%. But that is only on the difference from 191 and over. Meaning, if you're making $250,000, the whole $250,000 doesn't get taxed at 24%. It's only from $191,000 to $250,000. So you're getting taxed 24%. Yes, that's correct. So you're getting taxed more, but you're only getting taxed more on $70,000 or $60,000 in this case, not on the $250,000. Let me do some math so that you understand what I'm talking about here. Let's say that you're a person who makes $36,000 a year, which is about $18 an hour. Well, $18 an hour times 2,000 hours in a year, which is typically what people work if you work 40 hours a week, you're going to get taxed about at 12%, $4,500. Okay, so that's going to be your taxes that you're going to pay for the year. Now, if you make $45,000, which is going to put you at 22%, if that was true, what people think about, and you were taxed at 22% for the full amount, you would be taxed $9,900. But because that's not true, the real taxes are going to work out this way. You're going to get taxed up to the $45,000 at 12%, which is $5,400, and then on the $6,000, you're going to get taxed at the 22%, which is $1,300. So when you do the math, it's nowhere to the $9,900 that you would have paid if it was 22% on the full amount. On the same note, if you're making $250,000, you're not going to get taxed on the 24% on the full amount. You're only taxed 24% on the $60,000 that you exceeded the 191 by, and then everything else is going to get taxed at 22%. So I just want to repeat it again, because I want this to be super clear for everybody. It will never make sense to not go make the extra money. It will never make sense for you to say, I'm not going to work overtime. I'm not going to sell more products. I'm not going to sell more things, just because you don't want to pay or be in the 24% tax bracket. So up until the 12,000, you're going to pay nothing. 12 to whatever the amount was, you're going to pay 12% or 10%, then 12%, 22%, 24%, up to 37%. Not on the full amount, but on the excess of the amounts that we reviewed. So make sure that you go to a tax accountant or that you go to people that know about taxes before you go not work and before you go not make more money, because that is basically losing you money. At the end of the day, you want to go work and make as much money as you can. Now, there are tricks and things that people do to avoid taxes and all that, and I would never recommend you to do that, because it's never a good idea to go do stuff that is not allowed. People think that they're winning, but at the end of the day, the IRS has 7 years to audit you, and if they do and they find things that you should have paid and you didn't pay, they're going to make you pay it back with interest. And not only that, but if they find things that you're trying to avoid taxes, that is actually a crime, and you can even go to jail. So go to your CPA. My job, again, as always, was to plant the seed, to put the thought in your head. Everything else needs to be done by a professional. And As always, go to my Instagram account, drop a comment in the video, and I would love to talk to you, because if you go to my Instagram and ask me questions about this, I can even jump on a call with you if you want me to. As always, take care, everybody.